So, what's going on, guys? Uh, so, we're talking about macros. Macros. So, what are macros? Macros are specific time when the market do what? Seek liquidity or it runs for liquidity. So, that's what majorly macros are. Sometimes you might get macros that they just majorly consolidate. Sometimes, sometimes they consolidate. Majority of the time in a market, in a Q zone, you would see them do what? Deliver to either buy side liquidity or what? Or sell side liquidity. So high probability setups form during a macro or after a macro. So most likely you would see high probability trades during the macro when the macro is actually forming or after the macro. Okay. So what are the times? What is even the time when you can spot like a macro happening? That is what x50 to x10, which is this example. Let's look at the New York Q zone examples, which is the 950 to 1010. That is your macro time right there. So during this 950 to 1010, you should be doing what? Looking for macro signatures or algorithmic signatures in price that will tell you if this is going to be what? A buy, or if this is going to be what? A sell. So let's dive in a little bit. You can see this macro forming in this area here. We did what? Use this macro to do what? Seek for liquidity, which was the fair value gap on the higher time frame, which is the 1 hour fair value gap on the higher time frame. So during this macro, we did what? Delivered to that fair value gap. Then also there is a bearish order block on also on the 1 hour there. As soon as we use this fair value gap right here to take us higher one last time, what happened again? The macro, you can see it's macro opening price, MO. Anytime you see MO on my chart, it means macro opening price. So as you can see, the macro opening price, what do we go to? We went to the bearish order block, which is the 1 hour bearish order block right there, hitting consequence encroachment. Then we did what? Immediately we see a reversal. So now you can see this is during a macro. When is the setup forming? Right here during a macro, and you can see what? A high, a low, a higher high. As soon as we get below this bullish order block that was used to send us higher, you can see what? A retest of that order block for sales right there, and that will be your entry and your exit. You can see what a setup did what? Form during what? A macro, like that. Let's go into another one, another example. Look at this right here. You can see price doing what? Dropping lower, like that. Then we have this CB right here. Looking at this CB, what happened? Just at the CB, the macro opened right in the CB, and we use that CB to do what? Send us lower into what? A discount fair value gap. As soon as we see that happening inside the discount fair value gap, all this is happening when macro opening price. See what's delivery below macro opening price, then a reversal. You could be buying at the breaker. There's nothing wrong with it. That's what I did. Also, there was a fair value gap here which did what? Send us lower one more time inside this inversion level right here. That was inverse right here. Send us into that inversion level one more time. You can see a breakaway gap tapped into the fair value gap just by a little tick or two. What do? We attack buy side liquidity. This setup formed during what? A macro right there. And let's say you could not get your entry right here. Immediately after the macro, we did all this drop down one more time. So that will be your entry. and that will be your exit right there. Let's look at another example of it. It repeats every single day. Every single day. You can see what's this, the macro opening again. When we are looking for buys, I forgot to add this. Probably, but take notes. You can put this in your notes right now. When you are looking for buys, you would look for what? A displacement below macro opening price. That's what I'm saying. A displacement below macro opening price. What do we have here? We have like a discount wick right here. And what do we see price do? Seek for liquidity. Take out short-term sell-side liquidity right here. Then as soon as we get into consequence encroachment, what do? You have a macro PPR. One could be a buyer there if you are more inclined and in sync with the markets. You could know, okay, this is a macro PPR. Let me be buying either above it or as soon as the macro PPR is forming based on experience. This takes a lot of experience. But this right here, you can see this CB right here was formed during what? The macro. We inversed it also during that same macro. This could have been your entry. As soon as we get a close up above this, this could have been your entry right here. Or you could have waited for this to get taken, then a reversal back into it. This could have been your entry also. Exit right there. Like that. So it happens every single time. You can see this forming every macro. I'm not saying every macro, but you can find high probability setup during what? Macros. So you can see anytime you are looking for a buy, you would like what? A delivery what? Below macro opening price. Then wait for either a breaker setup or a inversion fair value gap setup or a macro inversion just like this one, like that, and that could be your entry for the trade and take it towards higher prices like that. Let's look at another example of this right here. You can see once more macro opening price. Yeah, what do? Swept what? Sell side buy side liquidity up here. What's just sitting right here? A premium fair value gap. Tapped into that. Also, this also takes experience to be entering at this point here, but you can see this fair value gap was used to do what? Send us higher in this during this trade here. It was used to send us higher, but as soon as the macro opened, we inverse it one more time. So one could have been a seller right here, or you could have waited for this right here, this high, because this is a high, this is a low, this is a higher high. As soon as we get a close below this bullish order block, it becomes a breaker. This could have been your entry also. Exit at previous day low, like that. That is, you can see it forming. When do all this high probability setup form? In a macro. So you could just keep looking for signatures like this. You can look at this cell that formed right here. Macro opening price. Macro opening price. You see what? A delivery above what? Macro opening price. Then we did what? This fair value gap that was used to send us higher. Yeah, what do? We inverse it. Once you start seeing something like this, an inversion happening during the macro, always expect either a retest of that inversion level, then to send us lower, or if there's a breaker, just like this example here, a high, a low, a higher high, expect what? The breaker to do what? Send us lower, and this will be acting as what? A breaking gap, like that. So look at this example of this right here. This was today's trade during the 1050 macro right here. You can see this is the 1050 candle right here. What do? We used this fair value gap here, this CB right here, to do what? Send us lower in inside this discount fair value gap. Sorry, that's a mistake. This inside this discount fair value gap. One more time, we take out what? Short term sell side liquidity that's resting just below this low right here. We did that right there. As soon as we drop inside the discount fair value gap, what do we get? An inversion of this macro, this CB, sorry, that was used to do what? Send us lower inside this one more time. We inverse it also during the macro. This could have been your entry here. If you never trusted all this chop, because you can see this day was a little bit back and forth, back and forth. So, assuming you never trusted this to be a buy, as soon as you see this macro signature right here happening, when you see what's macro opening price right here, you see what's a delivery above macro opening price. Also, you can see what's happening here. This is a what? A sell side imbalance, buy side inefficiency. We use it to do what? Send us lower, taking out this short term low right here. As soon as we took out this short term low, dropping also inside where this one bullish order block, two a fair value gap, discount fair value gap right there. As soon as we dropped into that discount fair value gap, what do? We inverse this CB that was used to do what? Send us lower, and this could have been your entry. It could have been, you could have exit your position right at this movement here, or could have waited for this or this final target right there, and that could have been your trade like that. So you can see setups forming during what? The macro. Could have ignored everything that was here today. You could have ignored everything, then wait for what? The 1050 macro. And as soon as the 1050 macro clicks in, you see what? Delivery below macro opening price, taking out a short-term liquidity, also dropping inside what? A discount fair value gap. We inverse this CB that was used to send us lower. As soon as we inverse it, we come to use fair value gap here, support the remaining portion of it acting as a breakaway gap, showing us what? Strong signs of what? Of bullish order flow right there. You have taken a partial there, right there, or right there, your exit full position. You can see it's happening every single time. There are sometimes when macros you won't, just like this, since it has done those major moves right here, you would expect, if we've not met our full target and we entered another macro, what do you expect? You expect that other macro to do what? Deliver towards buy side liquidity or sell side liquidity. You can see what's happening right here. We did add all this drop down, then macro opening price. We inverse this immediately. One could have been a buyer. One could have been a buyer. As soon as we close above this, we add a retest of this BPR. One more time here. One could have been a buyer here, and I've taken it up here. That was over 60 handles right here, from here to here. That was over 60 handles, if I remember correctly. Just using macros to take your trade, you can find those trades every single time. There's so many setups in this market, and you can find them in macro times. You can look at this 3 350 macro right here. What do we do? What do we do here? Right here. Macro opening price. Or macro opening price. No. Okay, if I remember, I can't remember. I think this should be it. Yes, the macro opening price right here. Macro opening price. What do? You have a displacement below, delivery below macro opening price. That was one. And what do we see happening during the macro? Macro runs for what? Liquidity. What's here? What's resting just below here? Sell stops, sell stops, sell stops, like that. So we had all this run for liquidity during the macro. As soon as the macro closes, you form the BPR. This could have been your entry right here, or this could have been your another re-entry right there, and what's attacking buy side liquidity, or previous day what? AM sessions high right there, and that could have been your entire trade, and could have been done for the day right there. You can see the risk to reward of trades that happen during macro. You can see it saves you a lot of stress, a lots of things, little risks. Look at this, 7 points and 61 points. Look at the risk reward. That's over 8 hours. You can see those high probability trades forming during macro times. You can see this one, right? This was a very little scalp, but this the idea forms every single time. What do we have here? Macro opening price, delivery below macro opening price, taking out short-term liquidity, sell-side liquidity right here. What do we have here? A discount fair value gap. Once more, we had a macro BPR. What do we do? That could have been our buying opportunity right here. I wasn't in the chat right here, but as soon as we get up above this CB right here, if you notice, this CB was formed during what? A macro. What do we do here? We used it right about here to do what? Send us lower, taking out what? Sell side liquidity, also dropping into what? A discount fair value gap. And what do we do after that time? We inverse it. As soon as we get a close above it, as soon as you get a close above it, could have been a buyer, and maybe your stops could have been under this candle right here, or you could have waited just like me for this clear entry, then be buying right here, would have been exiting right there. Also, since there was a major liquidity pool up there, because I wasn't waiting for all that, but there was a major liquidity pool up there, you drop down one more time. Since we have not taken out that major liquidity pool, this inversion level right here is meant to hold, and it is always holding. Only days when the market is a little bit choppy and low probability days, you might find this not working. But on days when you can see all the clear draw on liquidity, you can see all these signatures happening in the market. Once you start seeing those signatures, immediately you should know, oh, my setup is forming. And you can practice this all over and over again until you're able to see those things happening in your own charts. Now let's go back to this one more time. You can see this macro right here sent us to do what? At advisor liquidity right here. It's from the setup there, which is it's not my setup, so I didn't take this trade. We ran for what? We ran for this liquidity pool right here. As soon as we did all these movements right here, we entered into another macro time once more. We inverse this. Also, we came back to do what? Close below this other block right here, and also we did what? Dropped inside this one also. As soon as we are closing below another block, also we are also inversing PD arrays that are supposed to do what? Send us higher. As soon as we are doing that during a macro, you should know, oh, start looking for a return inside either a inversion level or a breaker setup if it gives it to you right there. That will be your sell. So let's look at one more. There's loads of example anyway. Macro opening price. You had this CB right here during the macro. I did not capture this entirety of this thing. There was a breaker setup that formed right there. You can see what breakaway gaps. As soon as we close above what this inversion that happened during this macro, as soon as we close above it, we had what? A retest of that inversion level. And what do you see? Attacking what? Buy side liquidity right there. And you see it happen every single time. Every single time. I already explained this one right here. See the breakout. Okay. Low, high, lower low. Close above it. Return, breakout, buy side liquidity. And see it repeats every single time. Macro opening price one more time, taking out what? Short-term sell side liquidity pool right there. As soon as we have that, this CB that was formed during the macro, what do we do? As soon as we close above it, that will be our entry. Exit could have been here. Exits, your targets too might have been here or here, but we never got that exit. So partial right there. So this repeats all over and over again. So one of the signatures is looking at what the fair value gaps, the CB that form during the macro. I'll brush up on that one more time. Let's go to another example. So looking at this macro time right here, you can see macro opening price. We had what? A delivery below macro opening price. When we are looking for buys, we take out what? A short-term buy side, sell side liquidity pool right here. As soon as we do that, you can see there's no fair value gap here. We had all this move up higher. Look at this CB. What's happened with this CB? We used it during this macro to do what? You can see it here. Send us lower into what? Short-term. This short-term liquidity pool right here. Then we did what? We inverse it right here. As soon as we inverse it, this could have been our buy, and your exits could have been right there, like that. Easy. That could have been your trade. Assuming, and already also we're at all-time high on this day, so careful taking trades during all-time high. But if you see this kind of setup happening during those during those times, you can have the what confidence, and okay, this will surely do this. So I whipped out my Fibonacci on this trade right here, then measured the standard deviation of 1, and also we dropped down inside this one more time. Since we haven't met standard deviation 1, we drop down into the inversion level one more time. Also we drop down inside this one, but you can see it's just the upper portion being used to do what? Send us higher. Look at where the body of this candle are resting. Inside what? The macro inversion. We just did all this damage here. Just like ICT always say, the wicks do the damage, the body tells the story. Look at where this is resting. Look at where it's resting. Inside what? This macro inversion right here. And what? Send us what? Inside this buy side liquidity pool, and also standard deviation 1, like that.